We're going to break down hybrid financial arbitrage, what it is, how it works for you. If you've bought life insurance before, maybe talked to agents, heard influencers or so-called experts online, clear your head of what you know about traditional life insurance. This is a different animal. Let's jump in. What is hybrid financial arbitrage? First, let's define it. Hybrid financial arbitrage combines two things. Debt optimization technology. Think of it like GPS for money. A specialized life insurance structure called Poli, private-owned life insurance. The goal is simple: help you eliminate debt faster, grow tax-free wealth, create lifetime income streams. But the engine behind all of this is the life insurance policy. Not just any policy, but one designed specifically for this strategy. How Poli differs from regular life insurance. Let's talk about misconceptions. Most life insurance policies are focused on death benefit. That's not what Poli is about. Poli is designed first as an investment vehicle. Then, after the design is finalized, we adjust it to meet IRS and insurance regulations. Here's what that means for case design. The focus isn't on how much will my family get if I die. It's on how much money can I safely put into this policy, borrow against, and grow over time without triggering taxes. The real question we're solving: how do I turn my debt payments and liabilities into income and wealth creation? Overfunding and the MEC line. So how does this work structurally? We write the policy as close as possible to the MEC limit, modified endowment contract line. Why? Because that allows you to put in the most cash possible while keeping the tax-advantaged status of life insurance. We're not designing this around a big death benefit. We're designing it around cash value and your access to that cash. The policy becomes your personal reserve account, like your own private bank. How the money moves. Here's the money flow, simplified. You take the money they would normally use for debt payments. You overfund the Poli policy with that money for the first 12 months. After 12 months, you borrow against your growing cash value, tax-free, and use that borrowed money to eliminate your debt. Meanwhile, the original cash remains in the policy, still earning indexed interest as if it were never touched. So you are eliminating debt faster, while building tax-free, compound growth inside your policy, and without losing access to your capital. Why this works? The IRS and the balance sheet rider. Now, why is this possible? A few key reasons. The carrier. We use a mutual life insurance company that's been around since 1848. That's right, before Lincoln. Ownership structure. They're mutually owned, meaning they're owned by the policyholders, not by hedge funds or shareholders. IRS rule changes. CARES Act 2020. During the COVID-19 crisis, changes to the IRS code created an opening. The balance sheet rider, BSB, once available mostly to banks and the wealthy, is now accessible to the middle class. This rider is what allows this structure to work for everyday Americans. Let's talk about how we make money for transparency. We want you to understand the differences. This is where many people get confused. First, let's compare. Traditional life insurance. Typical life insurance has a $266,000 death benefit. Commission a normal agent makes? Maybe $2,600 to $3,000 up front, but you may never see him or her again. Now look at hybrid financial arbitrage. Average policy size? Over $1 million in death benefit, because it needs to be that large to hold the overfunding and still meet insurance guidelines. Depending on client's debt level, our agent's commission is paid out over 6 years, so instead of getting a big advance up front and disappearing, financial literacy group agents work with you to help you get the maximum usage from the life insurance each year for 6 years. But here's the best part. Our agents become your partner for success. Why your success equals our success. This is a true partnership with you. We are incentivized to help you use the policy well, overfund it, and borrow against it strategically. The more you engage with the solution, the more debt you eliminate. The more wealth you build, the more retirement income you generate. It's a win-win model. And there is also long-term value that comes with this solution. Once your debt is gone, you can keep contributing all that freed up discretionary income back into the policy. That grows the accumulated value even faster. And that accumulated value is what funds tax-free retirement income, future borrowing needs, generational wealth transfer. There are even ways you can use this solution to recover taxes from your nest egg. This creates long-term, loyal partnerships, and we stay with you for decades. It starts with financial education. We're not selling insurance. We're offering a financial strategy to solve debt and wealth challenges simultaneously. Our focus is on eliminating debt, building tax-free wealth, creating income for life. This is not too good to be true. It's just that most Americans haven't heard of this approach. To wrap this up, hybrid financial arbitrage is not just a life insurance policy. It's a financial transformation tool for you. You win, we win. Thanks for watching this training. Remember, Financial Literacy Group is here to help turn debt into lifetime income and generational wealth. You can visit us at financialliteracy.group.